Hello, Robert Kiyosaki, the Rich Dad Radio Show. Excuse me. The good news and bad news about money. And man, is this economy screwed up? Is this economy screwed up? So after about 4 years of just pumping money into the system, it's running out of the system right now. It's called a 3 times crash. The first crash is going to be stocks and bonds, and that's the 401k and IRAs for many of the boomers. Number 2 is real estate. Home prices are dropping because interest rates are up. And number 3 is cash. When they print money, cash, the value of cash goes down. And my concern is there might be a run on the banks. People just want to get their cash out, or the banks may freeze your money. So these are very precarious times, and they're not normal, definitely not normal. So our guest today is a longtime friend and a Rich Dad advisor. He's the author of this book here, Tax-Free Wealth, How to Build Massive Wealth by Permanently Lowering Your Taxes Without Cheating. You could put legally here, because a lot of times we talk about how can you do it illegally, but it's best to do it legally because you don't want to go to I definitely don't want to go to jail and become, somebody's hula dancer. But anyway, all right, we're going to Tom and then Tom Wheelwright. But we'll also be talking about our upcoming event, April 6th, 7th, 8th in Phoenix. It's live. We don't do these very often, especially in Phoenix, because I travel all over the world, but we don't do it in Phoenix or in the States very often. And one of the reasons, of course, was COVID, because we stopped meeting. So this was April 6th, 7th, 8th here in Scottsdale, Arizona. You can go to the Rich Dad website to find out more information on it. But Tom is going to be one of the speakers there. So what I'm having is most of the speakers will be doing radio programs with me to encourage you to sign up early and come to the Rich Dad event in Scottsdale, Arizona, April 6th, 7th, 8th. The special room prices and all that. It's a great resort. But this is not a time to be stupid. That's definitely not the time, because the biggest bubble in the world, I believe, is about to bust. So our guest today is Tom Wheelwright. He'll be there. He's one of the stars of the show. He'll be there for all 3 days. And I think one of the biggest reasons you want to go there and be there and talk to Tom, you have access to him and all this, but you can learn more personally how to reduce your taxes, also per asset class. So like a person like me who has lots of gold and silver, how do I minimize my taxes legally? But the other thing too is, as I said, the Fed, Bernanke, who got a Nobel Prize, can you imagine that? And those other characters just blew the whole economy the world economy into this bubble. When just not that long ago, people were screaming, bidding up real estate prices. Then they raise interest rates and real estate prices are crashing. So if you're one of these persons caught upside down, you bought the house for, let's say, $1 million, but it's only worth $500,000 today, you have some personal problems right now. And so that's why I would suggest April 6th, 7th, 8th, you come to the Rich Dad event in Scottsdale, Arizona. Find information on our website, but we can talk to guys like Tom. So Tom, give me an overview of what you think of the world economy today. Are we just going to keep, is real estate always the best investment?
Well, hard assets definitely are. Definitely, hard assets historically always have been the best investment. Real estate, precious metals, other hard assets. But
oil.
We're in such a time where people just don't know, right? The markets don't know what they want to do. People don't know what they want to do. People are spending still like there's no tomorrow. Literally spending like there's no tomorrow, and they're running up credit card debts, and you just wonder, how long can this go on? They've had so much money given to them by the federal government, and now, that's starting to run out. So what happens when it completely runs out? It's really a tough time, I think.
I was at one of the high-end restaurants here in Scottsdale, and my neighbor, Scott Shermer, and I was sitting there looking at the prices, and he and I have lots of money. And we were in shock. We said, I thought about going to eat at McDonald's or something. You know what I mean? You know, price of a bottle of wine was now $200. You know, one hors d'oeuvre plate was $60. And when the place was packed, and Scott and I are rich, I said, I wanted to run, but these guys are just partying away like there's no tomorrow. So that's on credit. I'm sure some of them are credit cards. Some people are very rich here, but I tell you, these are not ordinary times. So what would you talk about? You know, what can they get by coming personally to the Rich Dad event, April 6th, 7th, 8th?
Well, first of all, this is so unusual, Robert. For you to hold a 3-day event where you're there, the advisors are there, and there's magic. You know, we've taught together all over, but to get the advisors there, and because we teach together, right, and to get us together like that, that's a pretty unusual situation. And there's some magic that happens when we're teaching together. There's no question about that. Plus, from my standpoint, I get to spend personal time. Anybody who's there, I'm not going anywhere during the breaks. I'm not going anywhere during lunch. I'm going to be there. And so we can have personal conversations, and having some personal conversations, whether it's me or whether it's, Kenny or whether it's John, I mean, whoever that personal conversation is with, I mean, I think those are invaluable moments, frankly. Yeah.
And if you're one of these losers with a 401k, I'd definitely come, because boy, you need help right now. Because the stock market was blown into a bubble. This is a 3 times crash. Stocks and bonds, real estate, and then cash is going to go down because they keep printing more money. So the savers will be losers also. So right now is not a time to pretend you're, Warren Buffett or something. I mean, even Warren Buffett just sent out a warning, saying that the CEOs and CFOs are lying. I mean, you can't say much more than that. So these are not ordinary times. You think, I'm just going to buy the dip and the prices will keep going up. My concern is we might slide into a depression, and then you'll be upside down. So, Tom, let's say I bought a house for $1 million, but now it's only worth $500,000. Is there anything they should be thinking about now before they exit stage right?
Well, first thing is, if your house is still high in value, now to be thinking about getting a line of credit on that house so that when it does drop, they still have that available to them, because that's the problem. When, a lot of people, their primary wealth is tied up in their home. Right. And if your wealth is tied up in that home and that home goes down in value, you can no longer say, well, I've got this extra bank here that I can go to. I can, I don't have this real estate I can refinance. I can pull money out of. And so really there are some things that they can do in preparation. From a tax standpoint, you know what? You don't get to deduct losses on a personal residence. So what you might want to be considering is, do you want to have rental properties where you get tax benefits instead of personal property where you don't?
Right. All those little finer details that the average person doesn't know, or our schools will definitely not teach. And like I said, these are not ordinary times. I have never seen, when real estate prices, just a year or so ago, they were bidding the prices up every day. And I said, this is not going to last, but that's when all the suckers jump in. And, and lately I've been talking to people about buying silver. Like one guy goes, oh, well, the premium's too high. I'm going, but the price is still low. I was buying silver at $50 an ounce, and today it's about $32, $33 a coin with premiums. And, oh, no, I'm going to wait for it to go. I'm going to wait for my house to go up. I think one of the most silly things people were doing was that, the house would appreciate, which it wasn't really, because they're just pumping more money into the system. So they would go out on their credit cards, they pull out a home equity loan and pay off their credit card. I mean, I think those days are kind of over right now, right?
Well, I think so. I always have thought that the worst thing you can do is turn short-term debt into long-term debt. I think that's just turning a short-term problem into a long-term problem. So I've never thought that was a good idea. I do think having a line of credit is a good idea, but just have it there, just have it available to you. I think whatever you can do to protect yourself it feels a little like, to me, I don't know about you, it feels a little like 2007. We're okay, it's coming down. When's it going to hit? And, all the prices are softening in the real estate market. People that are selling real estate still think, you know what, this is going to come back up. So I'm going to hold my price steady. And then there's no buyers. And that's what's going on. Like even in multifamily, that's what's going on, is that they're just having a tough time getting the price right between buyer and seller. Yeah.
And also there's kind of a rule that we talk about here. Every one of the advisors is over 40. And the reason why that's important for the people that I'll be in teaching at the April 6th, 7th, 8th is I meet some of these guys that are like 26 and they don't remember 2008. That was how long ago was that? They were kids. And they're giving financial advice because their stockbroker told them to say this, or the financial planner said this, or the real estate broker told them to say this. And they give out this bad advice. I think I'm trying to warn people this could be the biggest crash in world history. Is that possible, Tom?
Oh, it's absolutely possible. Well, it's the biggest bubble in world history. Yeah. So if it's the biggest bubble, the question is how much can they keep pumping air? The bigger the bubble, the more air you have to pump in to keep it inflated, right? So I think that's the big challenge is you lose some of these tools, especially where the Fed has decided we're not going to pump up this bubble. Right now, we're going to deflate the bubble. And so when you have deflation going, and then if the economy then all of a sudden slows, then you're in big trouble because you can't adjust that fast.
Yeah. And also, when people getting unemployed and all this stuff, their tax base is dropping. So the government is going to lose their income, which pays for our debt, which is at all-time highs of, some people say it's about 32 trillion, but when you count unfunded off-balance sheet liabilities, it's like 250 trillion. And then, so if the if the government, the Treasury doesn't start collecting, IRS doesn't start collecting more taxes, they can't pay the debt. And so that's why Biden, one of his first moves was to announce 87,000 new people working for the tax department in America. They're coming after you, George. That's what we said. That's true.
Oh, there's no question. I think most people that I know have never even seen an audit. If you're under 40, take that under 40. If you're under 40, you've never seen an IRS audit in your lifetime. But you're going to. Because you're going to have 5 times as many audits. You're going to have new technology that's going to track you and be able to track you so that they can catch you making mistakes or even challenging things that are rightfully in the law, but that they simply don't like. They do that now. So it's going to be, I think 2-3 years from now, your chances of being audited is going to go way up.
Well, with 87,000 new employees, that's a significant jump.
It's double. So they're doubling the number of people at the IRS, and some of those people are in customer service, but unfortunately, most of them will be new auditors, and they're going to be targeting. They say so. This is the way they play the words is just so ridiculous, Robert. Janet Yellen says, well, we're not going to have more audits for people under 400,000, right? That's if you're making under 400,000, you're not supposed to have more chance of being audited. But what she really said was your percentage chance, the proportion of audits between under 400,000 and over 400,000 is not going to go up. Well, 90% of audits are under 400,000 now. So 90% of those 87,000 people are going to be after the under 400,000.
Yeah. Have you ever been audited? It's like going to the doctor or the proctologist. They go up, with a light looking for everything. And by the way, if you're listening to this from outside of America, just understand this. The tax laws are fairly similar, right, Tom? In every country we've ever traveled to, you've checked it all out. They're very, very similar in all the countries throughout the world.
No, absolutely. The governments incentivize the same things in every country. Tax rates are the same in every country. How you earn your income, when you look at the cash flow quadrant, we'll talk about that on April 6th, 7th, and 8th. But how you earn your income has the same impact in every country. So professional investors always pay the least amount of tax, for example, and employees and self-employed always pay the most. And that's true in every country. So yeah, they're very similar.
Yeah. And let me ask this question. Is it possible for some people with the travel to come to this seminar? Is it possible they get a tax break for that?
Oh, absolutely. Yeah, I think they should absolutely. You gotta make sure you do the documentation. You dot your I's, cross your T's. We can talk about that when you come, but you can absolutely make this travel, the stay. You can make the cost of the event, all of it deductible. So
the government's going to help you learn how not only we come to the Rich Dad event April 6th, 7th, 8th. You'll learn how to make more money, and Tom's going to make sure you pay less taxes on that money. And the government will say, bless you, child, you're doing what we want you to do. Because you often told me that tax breaks are incentives, right? I mean, they're not loopholes, they're incentives for you to do what the government wants to have done, right?
Right. So take the example of coming to this seminar. If you have a business and this is additional education for your business, then the government gives you a tax break because they want you to improve your business. If you came as an individual and you had no business, no investments, we can't make it deductible. So the employee who stays as an employee loses tax benefits for the same expenses as the business owner and the investor get every single time.
And what Tom is saying here, when you say to somebody, go to school and get a job, they don't get those tax breaks, do they?
No, that's right. Employees do not get the same tax breaks.
Yeah. And so that's the tough part. So even if you are an employee or not today, but you want to learn, this is the only one we're going to do this year. We're not going to Zoom it. We're not going to, what do you call that? Stream it. And you're going to come in person. You're going to hang out. The special incentives, you got to pay a little bit more money to have dinner with Tom and all this, so you get to learn even more. So if you're really dedicated to your financial education, your financial future, making more money and paying less taxes, April 6th, 7th, 8th, you can hang out with Tom. Our oil guy will be there, Maselli, and you don't find me buying Exxon or BP, do you, Tom?
No. You buy the oil direct. You're drilling for oil.
And the reason that's important is because Biden, his very first act was to take the price of oil, to cut off the Keystone XL pipeline that ran from Canada to America. And I'm selling oil at that time out of Louisiana, North Dakota, and Texas for $30 a barrel. That move by Biden, he says he is the Inflation Reduction Act. That guy raised the price of oil in one day from $30 to $130. And I thought, oh my God, I should have voted for him because I'm getting richer and Trump's my good friend. I'm getting richer and richer because of Biden. From $30 to $130, but then I was in South Carolina watching this woman pump gas into her gas-guzzling Lincoln SUV, and I saw her watching that price go up and up and up and up and up and up, and I suspect she was thinking about, how am I going to put food on the table? Do you know what I mean? So these are not ordinary times. It's April 6th, 7th, 8th. When we come back, we'll be hearing more about what you will learn, what you can get, but more importantly, find out how to get there. We'll be right back.
If you're concerned about high inflation, looming recession, a stock market correction, or out of control spending in Washington, this is an important message to hear. Because the fact is, during every major crisis in U.S. history, many of those who failed to prepare watched their savings, investments, or retirement funds go down. while many with the foresight to own gold helped preserve their purchasing power. Gold even made some folks richer. Now we're facing several major crises at once, and experts say we may soon face even more economic trouble. So please don't wait. Learn the simple way you can diversify with gold and put yourself on the road to financial peace of mind, even in uncertain times. The new free 2023 Gold Guide from our friends at Gold Alliance can show you how. Just visit www.freegoldguide.com/Robert or call 1-800-473-4585. Republican Governor and conservative commentator Mike Huckabee says Gold Alliance is the only gold provider he recommends to his friends and family. Find out why and visit freegoldguide.com/Robert or call now at 1-800-473-4585.
Don't miss your only chance to attend a Robert Kiyosaki event in 2023. This is the first official Rich Dad event hosted in 13 years. Learn exactly what to invest in to grow your wealth and protect it from our socialist government. Learn Robert's top 5 investments that he is doing right now, which are safe from the government's plan to rapidly kill our money. Learn from Robert's actual partners, who are real investors, capitalists, and entrepreneurs. Robert will disclose everything he's doing to prepare you for these uncertain times. Reserve your space for the only live Rich Dad seminar in 2023.
And the event is called Rich Entrepreneur, Poor Entrepreneur. It's here April 6th, 7th, and 8th in Scottsdale, Arizona. Welcome back, Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. Once again, I'm unabashedly promoting my April 6th, 7th, 8th event here in Scottsdale, Arizona. All my advisors will be there, the people that actually make me rich, because business is a team sport. And I'm very much into cooperation, but in school, cooperation is called cheating. So one of our guests today is Tom Wheelwright, and he's talking about one of the most painful subjects on planet Earth, taxes. And so you'll be coming to the event, you'll be listening to like my oil guy, my gold guy, and all this. You'll be finding out how to make money in it, and Tom's going to be there to assist you in not paying as much tax, if anything. And Kenny Macker will be there for all your real estate guys. And I was strongly advised listening to him because this is a 3 times crash. The first crash is stocks and bonds. Second is real estate. Third is the dollar is going to crash because they're going to keep printing more money. So once again, April 6th, 7th, 8th, here in Scottsdale, Arizona. So Tom, how was the middle class? You know, we had a discussion on our Zoom events. How is the middle class being crushed while the rich get richer?
Well, you know, Robert, it's interesting, but when the U.S. tax law and most tax laws were first enacted, the middle class wasn't taxed at all. This was a tax solely on the rich, and it wasn't even until 1944 that employees were taxed on their wages at all. And it's been very recent, in the last 50, 60 years, that the middle class has paid more and more of the taxes. And so what happens is, of course, the rich, who have the highest tax rate, they have the biggest incentive, and they have the most money to go out and find ways to avoid taxes. Now, you know, hopefully they're doing it legally, but there are a lot of loopholes, and there are a lot of rich people. We were talking about this yesterday. They can go offshore. They can do certain things with their businesses. The average person can't do that. No. And so what's happening is, particularly the employed middle class, particularly the employed and self-employed middle class, they are getting hammered with taxes. And they're wondering, well, how come the rich don't pay taxes and I do? And I'm going, well, because you don't understand the tax law. If you understood the tax law, you wouldn't be paying taxes either.
And do the poor pay much in taxes?
The poor pay nothing in tax.
See, that's why the middle class is being hammered. That's what we were discussing yesterday. One of the things on this little video we were watching, you know, like Sarah was watching and all this, they hire the best attorney. The rich hire the corporations like Apple and all that. They hire the best attorneys they can find, and they're going up against average government attorneys.
No, that's true, Robert. That even those good attorneys and accountants who go into government for a little bit of time, they come out and then they make a lot of money fighting against the government, and that's how the world turns. And so they'll learn a little bit about the inside, and then they'll come out for the rest of their careers and they'll promote the outside. But yeah, I think the government is at a disadvantage for sure. Vis-a-vis the rich attorneys and accountants.
Yeah, so a young tax attorney goes and works for the tax department, gets all the experience on how the system works, and then they come out and they go for the highest bidders. And the highest bidders are companies like Apple and all those people that we're talking about in the video, and it's shocking how smart these guys are. Do you know what I mean? And they were talking about what you're doing moral and ethical and legal. He says, well, we're legal. And then the definition of ethical is it the laws out, the rules outside of you, like your religion and all that. And moral is your personal values. So we always say, obey the rules, but let your conscience be your guide when it comes to taxes. So once again, Tom, are there things a person can do? Like, I have literally tons of gold and silver. Are there things that people who are getting into collecting gold and silver, and there'll be people there, Andy Scheckman will be there talking about gold and silver. Are there things that people can do for gold and silver?
Yeah, absolutely. And what's interesting is that this video we were looking at yesterday, what these big companies do is they actually play one country against another. That's basically what they do. They take the tax havens like Cayman Islands and they play them against the UK and France and Canada, the US. And but what we can do, actually, one of the things we get to do here is we can play states against each other. So we get to play the same game. We're just playing it locally because we have states that don't charge any tax, and we have states that charge a lot of tax. We have California that charges 13.3%. Arizona's charging 2.5%. Texas charges nothing. So, you've got that opportunity just to work with the states, but you have to understand the law. Right. So once you understand the law, it doesn't matter whether you're investing in gold and silver. Frankly, there are some things you can do in the stock market, but you can certainly do a lot in real estate, business, and natural resources.
So let me ask you a question, because I never got the straight answer on this. Is a 401k really a tax advantaged?
It is actually for most people. It is for most people. And the reason is because, most people retire poor. So when they're retiring, right, they're actually in a lower tax bracket, and they get all of their marginal tax brackets as well, but they're in a lower tax bracket than when they were working because they're actually living on, the rule is about 60%, right? That's like a pension plan will typically pay you 60% of your wage. Well, that means you're in a much lower tax bracket because you're making a lot less money.
Okay. So 401k is great if you plan on being poor.
Exactly. It's really good if your retirement plan is to retire poor.
Welcome to the real world here. So anyway, Tom, it's going to be an exciting event, April 6th, 7th, 8th. And again, my guys will be there. Some of my guys, like Kenny, will be talking how you make money in real estate, Maselli in oil, Scheckman in gold and silver. And you'll be telling them how to minimize their taxes. April 6th, 7th here, 8th in Scottsdale. Any comments, Sarah?
I just have a question for Tom. Tom's one of my favorite teachers, so I'm going to take advantage of this while we're...
Oh, sure.
Tom, real quick, one thing you said on the call yesterday, we were talking about the difference between a corporation and a person and how corporations don't pay tax. Can you elaborate that? Because I think that's where people get maybe angry or upset, like, oh, Apple didn't pay any taxes. Can you explain that a little bit?
Well, yeah, corporations can move anywhere they want. So Apple, for example, they have some headquarters actually in Ireland. Well, in Ireland, they pay a very low tax rate compared to other countries like the U.S. And so they're able to move headquarters. They're able to move where they perform. Individuals, it's much harder for us to move. I mean, we want to live by our parents. We want to live by our grandchildren. It's much more difficult for individuals to do that, but corporations can do that. Plus, corporations, remember, corporations still in business. And so business has the biggest tax advantages. Entrepreneurs always have the biggest tax advantages. And so they're actually able to use tax laws better than an individual would be able to use.
And if you have questions on that, our our corporation's attorney, Garrett Sutton, will be there for 3 days also. And you will talk to him about how we can keep the money moving through different corporations legally. Please hear me. I highly recommend legal, ethical, moral. One more thing. I don't know. Foxconn just announced they're pulling out of China, and they're going to move. They're going to move everything into India. Foxconn builds Apple iPhones and computers and all that. So the Indian people gain, but the Chinese people lose. That's what Tom is talking about. A corporation, a business can move. The shareholder or the owner can sit here back in anywhere they want. They can shelter their money through the Caymans, through Ireland, Switzerland, and all this. But the employees of China just took it. And the employees in India will be happy, but they still can't move also. And that's the problem. Go to school and get a job. You're kind of trapped. It's like, Sarah, you own real estate now, right?
Correct.
And there's a lot of tax advantages for you on that.
That was my primary purpose.
Right. So just because you're an employee doesn't mean you can't do anything.
That was going to be my second question for Tom. Is there, well, I already know the answer to this, but if you're an employee moving to the S quadrant and then moving on, are there tax advantages as you move quadrants as an incentive for an employee to maybe start a business while they're an employee?
There can be. The challenge that most people have is that they move to the S quadrant, for example, and they end up paying higher taxes because they don't have a good team around them. Like Robert was saying earlier, this is a team sport. Yeah. This is why April 6th, 7th, and 8th, we're teaching as a team. We're actually demonstrating what it's like to work together as a team. And so, to me, that's the critical part. That's what you have to start looking at is I need advisors. I need mentors. I need other people around me. I'm going to need an attorney. I'm going to need an accountant. Before you didn't need one. You could file your taxes on TurboTax as an employer. If you're in some other country, use the government's, filing system. But, once you move to a different quadrant, Sarah, your life gets more sophisticated, gets a little more complicated, and you need a little more help. But the good news is that every time you move to a different quadrant, as you go around the quadrant, you end up with lower taxes if you have good people around you.
Right. And then for those of you who are S's, like S stands for smart person, specialist, or small entrepreneur. The people say, I'm going to start my own business. You just move into a higher tax rate from E quadrant employee to self-employed quadrant. So
yeah, you absolutely can.
So it's tragic what people do because they don't know. So the person I'll be talking about that is my Dr. Shrednicki, Nicole, an A student. And the trouble with A students is they're smart, and that's S quadrant. And she busts her ass, she works hard on all this, but she's paying higher and higher in taxes as a self-employed doctor. And it's hard for her to bust that mentality because she's so used to being the smartest. And God knows, Tom and Sarah, I'm definitely not the smartest guy on my team because most of my life I've been the most stupid in my class. So it's pretty easy for me to shift from, E and S to B and I. But Dr. Shrednicki, frickin' A student, valedictorian, all that stuff, she has a tough time moving. So for all of you out there who are the A students, this program on April 6th, 7th, 8th is definitely for you because maybe it'll inspire you to get out of the S quadrant, which is the worst quadrant for taxes. Right, Tom?
Yeah, it is. I do think students, and I'm one of them, we actually have a disadvantage because because we're used to, being able to do it ourselves. And it's fine. I mean, for me, yes, I should still be doing my taxes, but I shouldn't be doing, I rely on other people for real estate. I rely on other people for oil and gas. I rely on other people for gold and silver, attorneys I rely on. So I still have to have that team around me. And it's one of the greatest lessons I've learned from you, Robert, being with you for the last 20 years is that you really do have to work as a team, because otherwise, the thought that you can know it all is just a ridiculous, handicapped thought.
Yeah. And that's the problem with people like professionals like my poor dad. They actually think they're smart, and that ego gets in their way. But they're poor as church mice. So once again, Tom, thank you for all the years. Again, this is Tom's book here, Tax-Free Wealth. If you can't make it, get this book. It'll give you a good start. So anyway, thank you, Tom, and we'll see you on April 6th, 7th, and 8th.
I'm looking forward to it.
Thank you. And we'll be right back. Welcome back, Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. The bad news is I think we're heading for a depression. The bad news is I think there might be runs on banks as people panic. And again, bad news is this. I think we're heading into a 3-time crash. The first of the 3, stocks and bonds. So all you guys hanging on to your bonds because you think bonds are safe, you're about to bend over and grab the soap on that one, man, because it's because when interest rates go up, the bonds go down. Mm-hmm. The second is this. So that's the first one, stocks and bonds. When they raise interest rates, stocks go down. The second is going to go down is real estate. And to save everybody, the governments of all the world are going to print more money. So your savings are gone. Your dollar is gone. So that's why on April 6th, 7th, 8th, if you're not here because you're busy or you don't have the money, I'm afraid you're missing one of the most important events, because we almost never do these events, right, Sarah?
This is the first Rich Dad only event in 13 years.
And all my advisors will be there. My oil guy, Kenny McAvoy for real estate, my gold and silver guy, my corporations attorney, Tom, our tax guy. Blair on how to sell, because if you can't sell, you have no income. And all of these things, and Kim will be talking about how to evaluate a good deal from a bad deal. And so this is April 6th, 7th, 8th. The prices are reasonable. There's special incentive pricing, meaning you pay more money for special access at dinner time and all this. But it's 3 days of immersion learning. Right, so
absolutely, and I'm so glad that we touched on like Garrett being there, and Tom really encompassed this learning style. You guys teach as a team, because the most important, people in business are your team members. Right. So it's a cool atmosphere to learn in, because you get all of it at once, the big picture.
And if you're an S, small business or self-employed or a smart person like a doctor or a lawyer or accountant, this program is for you, because being smart is a handicap around Rich Dad. That's why I wrote the book, Why A Students Work for C Students. I was a C student, and I don't have any ego about being stupid, but A students do.
Yeah, and I think opening I'm an S. I'm small business owner. or self-employed, and I think hearing at least the potential opportunities. So I pay the largest amount of taxes, so I have to think of ways or find ways to offset that tax. And if that's all you get out of this, you're going to save yourself so much money by just being exposed to that information that you won't get anywhere else.
Right. And if you're a legitimate business owner, this is a tax break.
Absolutely.
And I don't care where you're on the world. Tom and I have taught all over the world. I mean, all over the world. And he researches all the tax laws because he is an A student, and the tax laws are basically the same. E's, S's, B's, and I's. E's pay 40%, S's pay 60%, B's pay 20%, and I's pay 0%. So what is that worth to you? So any final comments, or Sarah?
Final comments is I'll have the link to registration in the description below. So check out the different events going on through those 3 days, and sign up as soon as possible because we do have limited seating. We do have discounted hotel pricing. So if you're coming in from out of state or out of the country, you can stay at the hotel.
Even though I live here in Arizona, I'm going to stay at the hotel also because I don't want to be driving back and forth.
Right.
And there'll be dinners and parties and things like this where you can get to meet different people from all over the world.
Right.
So this is probably the most important event for Rich Dad this year. Again, April 6th, 7th, 8th, Scottsdale, Arizona. Please go to our website, richdad.com. Thank you for listening to the Rich Dad Radio Show.